Hello and welcome to the Weekend Investing Daily Byte of 8th of August. The market remains edgy. We opened on the higher side of yesterday's range but gave up during the day. Results have been mixed. Overseas cues are also mixed. Nikkei was up. US markets were slightly soft. The futures were slightly soft. Um, Not sure if the market is yet out of this current situation. It's a wait and watch where the markets will go, but we are now at the lower edge of this fall, as I'll show you in the charts. And one more bad news can really, tip us much lower. Today was the RBI outcome on interest rates, the monetary policy meet. Um, they held the rates, did not change it. Should they have cut the rates? We'll have a discussion on this towards the second half. But some of the good things about the economy have been reiterated at the RBI meet that should give some more confidence going forward. But please, before we move forward in this video, please subscribe to the channel. So the markets are going nowhere actually right now. Yesterday it was looking like a positive move as it bounced from the average, closed at a 3 day high, but still not able to take out the highs of the previous 2 days. So, as I've been mentioning, the first signal for me that some uptrend is possible is taking out at least a 2 day high. And if you see this, the last four sessions is basically, it's not been able to take out 24,400. So now if we are sort of in a flag like formation here. If we break down below this flag, then of course some more downside is possible. But above 24,400 is where this gap is likely to be filled, and that will really, I would say, confirm that the upside is on. Till such time, I think the market is undecided, and of course below this candle is where the real weakness will actually start, where people may start to panic once again. Minus 0.74% on Nifty. So directionally, Nifty remains a bit undecided, I would say. I would not call it very weak, but yes, weak and undecided is the right thought on today's market. Nifty Junior has done something which is also a bit weakish in terms of its outlook. It recovered back to the average, 40-day moving average, which is a significant, important average, and retraced from there. So now, until it recovers above the 40-day moving average, I think this index is not going anywhere. So again, we are sort of in a consolidation zone because the last two sessions have been inside days of this big candle down. So whenever you have inside days and inside days keep building up 2, 3, 4, then a big move usually comes around breaking the range. Whether we will have a range, a big move upwards, or whether we will retest this 70,000 is something that I don't know as of today. Minus 0.79% on Nifty Junior. The good part about the market today was that mid caps and small caps did not participate as much downside as the large caps. So 0.35% only drop on mid caps. And if I see this bottom again, is the Lakshman Rekha for mid caps below, which certainly a lot of panic may happen. And for small caps also, this moving average was the Lakshman Rekha. It couldn't move beyond that, retraced somewhat, and is still there. So again, here 16,800 is sort of the line of control for small caps. But I think today's price action was reasonably strong versus the market. 0.28% down on that. Bank Nifty flat totally, which is good news actually, given the fact that RBI did not change the rates. There was disappointment, but Bank Nifty probably already was discounting that fact today. 0.08% on the positive. Today's heat map does not have much of green, but Tata Motors was able to go up 1.6%. HDFC Life, SBI Life, HDFC Bank, all these stocks were up along with Bharti Airtel, Sun Pharma, and Cipla marginally, and Dr. Reddy's as well. The major losers were in power sector, so NTPC, Power Grid, IT stocks were losing badly. Infosys, HCL Tech, Wipro, energy stocks, oil and gas also down. Reliance, ONGC, Coal India, BPCL, steel and cement also down. Grasim, Ultrasemco, Tata Steel, JSW, all down. So not many places to hide. Mildly down, also Asian Paints, L&T, and L&T down 2.3%, and you also had Adani stocks going down. In the Nifty next 50 heat map, you had some more greens. So Trent, ICICI, General Insurance, ICICI Prudential, along with LIC, Motherson, ABB, somewhat Pidilite, retained their ground. And you again had Jindal Steel, Shree Cement, Vedanta, Tata Power, Adani, GAIL, Godrej CP, DLF, HALB, Havels, Bosch lose ground. So mixed bag with more towards the red than towards the greens, in line with where the markets were. So sectoral trends were mostly red. IT leading the markets down minus 1.9%. So there is maybe fear of US markets going further down. That is why IT is following that. Metals and commodities also down 1.7%. Energy and public sector enterprise stocks. Now, results as the public sector enterprise stock results are coming out, like RBNL results for output. So obviously these results are not going to impress the market because these stocks are getting priced for some other developments 5 years down the road. So today's result is not where some decent numbers can be seen, and hence there was disappointment all across where some of these results are coming. Real estate also, after yesterday's bump up on the change in taxation, but that could not sustain the real estate rally, down 1.2%. PSU banks, which were up yesterday, also down 0.8%. Nifty overall down 0.7%. So overall, the sentiment seems to be weak and I would say weak and cautious. To get the optimism down, we need a couple of positive sessions and go beyond 2 and 3 day highs to really get some momentum back. Pharma stocks doing quite well actually. Pharma closed at an all-time high today, which is phenomenal. That usually happens in weaker markets where money starts to move more towards defensive stocks. So pharma was up 0.35%, not much. It lost some of the ground that it gained today, but in two sessions, you can see that it has really got some nice thing going for them. Stock spotlight was on Symphony. So we had discussed this stock a day or two back also, and this stock was up again almost 10% today. And this is probably a weekly chart, but there's a buyback in that company, and that's why the stock is running like crazy. It hasn't done much since 2021, but 3 years later, the company decides to go for a buyback, and that's how it is running. It has been consolidating actually since 2015. So you can see that 2013 to 2015, in 2 years, this stock went from around 100 rupees to 1100 rupees. So imagine going 11x in 2 years, and imagine that everybody is so bullish on it, given this recency bias and the fact that it has gone up 11x in 2 years. Everybody and their grandmothers would have bought it, definitely at the peak, and it has taken a good 9 years for those weak hands to get out and consolidate. And now the next move seems to be starting once again, possibly. So this is how this recent changes in a stock, once that rally is over, traps a lot of folks. So even if you were riding this, you need to get out at some point to protect your opportunity cost of your capital right here. Coming back to the main topic of the day, should RBI have cut rates? And this is potentially my own opinion, could be right or could be wrong, but let's see what RBI did. They did some good announcements as well. So this is from the Economic Times. So the MPC meet kept the rates unchanged. They have projected inflation at 4.5%, and 4.4% for FY26. So for the next almost 2 years, RBI is projecting that we will have a reasonably, you would say, contained inflation as per their forecast. Inflation for Q2 has been hiked to 4.4%. So what was earlier measured as at 3.8 is now 4.2, but Q3 projection is 4.7. So they want to bring it back to 4%, which is their target. And for that reason, they have not cut the rates right now. But what is happening is that if you see these two charts, this is the US 10-year yield and this is the India 10-year yield. Now, US 10-year yield has gone from half a percent to 5% very very quickly in 2 3 years, and is now dropping fast. So there is, while the Fed has not cut rates, but actually the yield has come down from 5 to almost 4. It went from 4 to 4.6 and is now down to 3.9 again. So the market is sort of leading the Fed, that the market is pricing in a lower interest rate. So the interest rates are definitely, most likely, I should not use the word definitely, most likely are coming down, and that's what the Fed has also indicated in their previous meet, that in September there may be 1% cut and there could be another one cut going forward. India has had peaked much earlier at around 7.6% in mid of 2022, and we've been ranged between 7 to 7.5 since then. We are now at the lower end of the range at 6.8%. So I mean, India market is not so leading in terms of where the yield should be going. So India market is not doing that, and hence I think RBI possibly also reading market moves. That market is not really expecting too much of a downside on the India interest rates. But my personal thought was that it could have been a good sort of a trigger for the market, especially when markets were looking weak, that a signaling of at least end of rate cycle could have happened, knowing very well that September the US cuts are very likely to happen. So RBI could have sort of stolen the thunder to some extent by preempting that, but they decided to play it safe and not cut at this point of time. The other good things that were said in the RBI meet was that the real GDP forecast for FY25 has not weakened. It is unchanged at 7.2%. And, that is, in my view, quite robust. I mean, with this kind of a global environment, the geopolitical situations that we have, 7.2% real GDP growth. So 7.2 plus, let's say, 4.5%. So almost 12% nominal growth for the current financial year FY25. I think it is really good, and market will continue to remember this and at that we are still in that 12% nominal growth year, and the next one is also looking good. So some of the other things that RBI did very well, I think, was to open up the UPI tax payment limit from 1 lakh to 5 lakh. So that will also probably encourage people to use more UPI for tax payment, and several other sections were there. I'll not go through that. The main one which I thought was important was to speed up the clearance of checks within few hours instead of the few days that it takes right now. Although I don't know how much on ground is that going to change, because only yesterday I had a issue with RTGS not going through even in couple of hours. So RTGS, which is supposed to be an urgent transfer of money, because I mean it is real time once you enter, once the operator will enter in the system. But if the operator is lethargic and he or she has piled up a bunch of RTGS which is not put in for 2 3 hours, then the whole purpose gets lost. So I mean these are the sort of real challenges we have in the Indian banking system, because the people who are running the banking system are still maybe living in the past, and their efficiency levels are nowhere near where it is desired. So what are your thoughts on these interest rate scenario? I mean, the fact that RBI did not cut, and maybe the market post this announcement was a bit disappointed, although Bank Nifty didn't show as much, but Nifty was clearly somewhat more that the RBI cut has not come through. Maybe it will come through the next time post the Fed meet, but they have missed one good opportunity to do that. So do keep writing in your comments. I'll be on the lookout for them. I try to respond to each and every comment. Please do like and share our videos. Please do send us suggestions how we can improve this channel. The purpose of the channel is to disseminate whatever knowledge and information we are able to share, and build a very good, knowledgeable community around this. Thank you so much. I'll see you in the next one. Bye.